All right, let's talk Duolingo. Their Q3 2025 report just dropped, and honestly, the numbers are pretty wild. We're going to break it all down in about 5 minutes. The language learning app is on an absolute tear, so let's jump right into the main event. It's insane growth. So, Section 1, Duolingo's explosive growth. Look, the first thing you really need to get your head around is just the scale of what's happening here. This isn't just some popular app anymore. It's a global thing, and it's picking up speed like you wouldn't believe. Okay, first up, daily users. Get this, 50.5 million people. That's how many are opening up the app every single day. To put that into perspective for you, that's like the entire population of Spain deciding to learn a language all at once, every day. That is the kind of scale we are dealing with here. And here's the kicker. That huge number isn't just sitting there. It's growing fast. We're looking at a 36% jump in daily users compared to last year. Now, growing that quickly when you're already massive, that's the kind of thing that really gets investors paying attention. So you've got more users. And guess what? That means more money. A lot more. Revenue shot up 41% from last year. It's a pretty simple equation, right? More people on the app is translating directly to more cash in the bank for Duolingo. All right, next up, the subscription powerhouse. So the big question is, how? How are they pulling this off? Let's get into the mechanics of it, the engine that's really driving all this financial success. So, you're probably wondering, right, where is all this cash coming from? Is it from ads or something else? Well, the answer is actually pretty simple. It all comes down to one core strategy. And that strategy is all about turning free users into paying customers. And let me tell you, they are really good at it. Just look at this. They jumped from 8.6 million subscribers to 11.5 million. That's almost 3 million new paying customers in just 1 year. That is just fantastic conversion. But wait, there's more. It's not just that they have more subscribers. Each subscriber is actually spending more money too, about 7% more on average. So why is that happening? Well, people are upgrading. They're choosing the pricier plans like the family plan or that new fancy max tier with all the AI features. So you get more people paying and each person paying more. That is a killer combination for growth. Okay, let's move on. Section 3, decoding the profit numbers. Now, this is the part of the earnings report that might make you scratch your head a little bit. We've got a couple of different profit numbers that look, well, really different. But don't worry, we're going to make it all make sense. So check this out. On the one hand, you see this huge number, net income of $292 million. Wow, right? But then you look at another number they report, adjusted EBTI, and it's 80 million. That's a massive gap, more than 200 million bucks. So what is going on here? Yeah, why the huge difference? It's a really good question. And the answer is actually a perfect little lesson in how to read these financial reports. It all comes down to a one-time accounting thing. And here's the secret. That giant net income number, it got a massive one-time boost from a tax benefit. We're talking $222.7 million. Now, this isn't cash they made from operations this quarter. Think of it more like an accounting adjustment for past losses. So while it's good news for the company's books, it's not a reflection of their day-to-day business. And that's exactly why people who follow these companies, analysts, they focus on something called adjusted EBITDA. It's a metric that basically says, okay, let's ignore all that one-time weird stuff like that tax benefit and just look at the core business. And that number, the 80 million, that gives you a way clearer picture of how the company is actually doing. And by the way, that 80 million is a record for them, so their core business is incredibly healthy. All right, Section 4, guidance for the future. So they had this amazing quarter. What does that mean for the rest of the year? Let's see what they're telling investors to expect. No surprise here. After a quarter like that, they're raising their forecast for the whole year. They're now expecting to pull in over $1 billion in revenue. $1 billion! That's up 38% for the year. And just look at that adjusted EBITDA margin. It's getting bigger, which means they're getting more profitable as they grow. When a company does this, it's basically management shouting from the rooftops that they feel really, really good about the business. Okay, final section, your final takeaway. We've gone through a lot here. Users, money, confusing profit numbers. So let's just boil it all down. What's the one thing you need to remember? So here's what it all means. 1, the growth is just bonkers, both in users and in revenue. 2, their game plan is simple and it's working like a charm. Get people on the app for free, then convince them to pay, and pay more. 3, don't get thrown off by that big net income number. Their real core profitability is super strong and getting better. And finally, 4, the company is feeling confident and they're raising their expectations for the future. It's really that simple. I mean, when you put it all together, it's an incredibly strong story, right? They've found a winning formula and they're just crushing it, which kind of leaves you with one big question, doesn't it? With a growth machine this good, can anything actually slow Duolingo down?